What's up YouTube, and welcome to another episode of Finance and Freedom. My name is Todd, and today we're talking about why I think Bitcoin is poised for a breakout. But before we do that, all right, let's go over the reasons why I think Bitcoin is poised for a breakout. First off, gold is now hitting new all-time highs. As you can see on this chart, we're up to $3,606.30 today. That's massive, and there's typically a very tight correlation between the price of gold and the price of Bitcoin. People oftentimes refer to Bitcoin as the digital gold. People use it as a store of value. The difference is Bitcoin is more easily transferable, more easily stored, and so a lot of people are now moving from gold to Bitcoin. It just is a better store of long-term value. Next up is the M2 money supply. Basically, it's the amount of money that is available in the market. It has, some ties to liquidity and how much people are willing to spend. And so if you look at this chart here, the chart just keeps on going up and up and up. It's an upward trajectory, and I think that's what Bitcoin is going to continue to do too. People will continue investing whenever M2 money supply is up. People have extra money. Like I said, liquidity goes up. People are more willing to spend for risk-on assets like Bitcoin. Next up is a big one. Tomorrow, it is very possible that MicroStrategy will become part of the S&P 500 for the first time. There's no guarantee. In fact, I put it about a 50-50 chance at this point. But if they do end up being part of the S&P 500, there's going to be a huge inflow of money into the company, at which point they'll start buying up even more Bitcoin than they already do. In fact, if you don't know this, MSTR is probably one of the biggest purchasers of Bitcoin in the recent history. They have bought billions and billions of dollars worth of Bitcoin and continue to do so on a regular basis. Their spending has slowed down a little bit in recent history. I think they're just kind of running out of extra money to buy Bitcoin with. But moving on to the S&P 500 would probably give them some extra spending power to buy even more Bitcoin. Additionally, if it's on the S&P 500, that means that everyone who owns the S&P 500, that's retirement funds, that's everyone who owns the S&P 500 is now indirectly exposed to Bitcoin, which is huge. All right, moving on. If you look at the market cycles over the past, each one of these shows a 4-year cycle. If you look at our cycle right now, we've never hit the point of euphoria. Every single cycle has had this huge upswing, huge spikes, and we haven't had that. In fact, many economists have shown that Bitcoin has now gone from being 60% volatility down to like 30% volatility, which could say that the 4-year cycle is now dead, and we just can expect this slow uptrend to new highs pretty regularly, which I would be okay with. We don't need the euphoria and dump. I'd prefer the slow growth up. At any rate, it doesn't look like we've even hit that. And in fact, if you look at Google Trends and searches, it's never gone up during this entire cycle. Like in the past, you look at the Google Trends, the Google searches, they've all spiked. And so retail investors or normal people like you and I, we're just not searching for it. We're not getting invested, not getting excited. And so that's another reason why I think we're just at the precipice of things going really crazy, or not necessarily crazy, and things just kind of slowly going up. Like I said, I'm fine with either one. In fact, I'd probably prefer this low trend upward, just because when it dumps, it hurts. And I've been doing this for several years now, and like I said, it hurts. Even though I've been doing it for a while, I still hold on to it. I haven't sold, but yeah, it still hurts. I'm a hodl kind of guy. Hold on for dear life. All right, and the last point that I'm going to make is that JPMorgan, a company who has traditionally been a Bitcoin hater, is now saying Bitcoin is too cheap as volatility hits record lows. In fact, that was what I was saying earlier. Analysts at JPMorgan Chase & Company assert that Bitcoin appears too cheap relative to gold, prompting a revised fair value estimate approximately 13% above current levels. Okay, that sounds pretty good. Using a volatility-adjusted framework that benchmarks against gold's private investment market, valued at approximately $5 trillion, The bank concludes Bitcoin is currently undervalued about $16,000, reinforcing its appeal for institutional portfolios. This assessment stems from a dramatic compression on Bitcoin's volatility. 6-month realized volatility has fallen from nearly 60% at the start of 2025 to just 30% today, a record low. So if JPMorgan, a company who has traditionally been against Bitcoin, they think it's funny money, they're just not interested, is now thinking that Bitcoin is too cheap, they're one of the big dogs in the financial game. And so if they are starting to recommend Bitcoin, I think this is just going to be a starting point for a lot of companies to start jumping in, and not just companies, but retail investors. In fact, they'll start recommending it to their clients to invest. It's just, I think it's going to be a slippery slope, but in the good way, I guess, a slippery slope upward. Anyway, those are all the reasons why I think Bitcoin is poised for a break upward. Honestly, September historically has been a red month, but it kind of seems like we might have already hit all-time lows for the current month. And so hopefully we get this continued upswing and things start going well. Anyway, my name's Todd. Thanks for joining me today. Feel free to like and subscribe down below, and I'll catch you again next time. Thanks.